The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern time, and we got markets off to the races to the downside. We have a hot PPI number. We have a weekly jobless claims under 200,000, folks, and you put on top of that a little Fed speak, talking about maybe going back to 50 basis points in terms of the Fed hiking. As we just continue to see numbers that run hot, we'll get into it. But started off with the markets. We got the S&P. I have the SPY up there. Let's go back to the S&P futures. You talk about a drop-off. S&P, basically it's pre-market session lows off 1.1%. You see the acceleration on that hot PPI number. You have, and let's just jump over to some of the headlines as we go through it before we do the charts. Producer prices exceed forecast in the biggest gain since June. You're talking about a 0.7% jump last month, the most since June. Higher energy costs, according to data out Thursday. That's the Bureau of Labor Statistics. The PPI climbed 6% year over year. 6% year over year, 7% on a monthly basis. Doesn't always indicate that those costs go from the producer and get laid on the consumer, right? But nonetheless, if you have higher producer costs, they're going to be somewhere in there. They're going to be in the margins or they're going to be into the consumers. They have to be one way or the other. The market was looking for 0.4% and 5.4%. It just doesn't stop with these numbers, folks. That is a bang-up number. Very tough to imagine the market catching a huge bid on that number. Then you transition to the headline we had with the Fed's muster. Now, she is not a voting member, okay? But nonetheless, Bank of Cleveland President Loretta Mester said she saw a compelling case for rolling out another 50 basis point hike earlier this month, and the U.S. Central Bank has to be prepared to move interest rates higher if inflation remains stubbornly high. It's becoming very difficult to argue that it's not already stubbornly high. What are they going to do? 50's back in the conversation. If they were talking about it last month and we're getting this type of data where you have the numbers exceeding where we're talking about here, very difficult to imagine that the market is priced correctly. I mean, I spent a lot of my program yesterday talking about the rise in what the market has expected for the Fed implied rate, right? In terms of from the beginning of February, where the market expected the Fed implied rate to be in the middle of this year, at the end of this year, versus where it's looking at right now, and every day it just keeps getting worse and worse. As in every day, I think the market just keeps pricing higher and higher rates. We had the 10-year just hit a low price point recently of 111.25. You back it up to just a week ago, and that's 2 full points below where we're trading at right now. The 30-year is off 14 ticks right now. A lot of conversation about the 2-year, right? 2-year, not quite to the level that you got to late yesterday, but you put this thing on a daily. Pretty remarkable price action on the 2-year. We have the S&P's off 46. So you combine that, man. Is 50 back in the conversation? If 50 is back in the conversation, it's going to be remarkable if this market proceeds to fight off where we are right now. Now we're coming in right to where we were on the Tuesday low, okay? And that's when we got the CPI number. Quite the volatility to that number. As Kevin Hincks said, we're going to talk to Kevin Hincks in a few minutes after the first break. He said a VIX right now at 19. Not going to put words into his mouth. Something like attractive, or something to that degree, as in more volatility than maybe what the VIX is saying. And we're seeing it play out, folks, over and over. The VIX only spiking to 1955. Meanwhile, it seems like we're getting 40 to 60 S&P point rallies every single day in one way or the other. Tuesday, we got it 4 times. Today, we'll see if we catch a bid. We're below anywhere we were yesterday on that low towards the morning. And yeah, it's going to be some tough numbers now. Now, let's get back to the PPI numbers. So the market was looking for 0.4% on a monthly basis and 5.4% on an annual basis. To get the annualized number on a monthly basis, right? Going forward, to extrapolate, you just got to times it by 12. Well, going back, they get to go year over year. But if you say we run at 7% last month, you run that for a year, you're at 8.4% year over year. Versus the market was looking for a pace okay, of 4.8% in the last 30 days, and the last 30 days come in at 8.4. I'm giving the bear case in terms of how substantial these numbers can be, and they don't always translate, all right? CPI, a much more important number than the PPI, but you're talking about mammoth beats. You're talking about a hot CPI number. You're talking about jobs of 500,000 plus added. I have to chuckle in the middle of it in terms of what is going on, man. The narrative that inflation is being tamed is just not there. And we have had quite a run-up in equities as that narrative has taken hold. So if it unwinds, be prepared for some substantial moves. We're seeing it play out this morning, and I don't expect 50 will be back in the mix just because there is enough lag that you could make the realistic case that they could just go 25 forever until they make a hint. And there's probably enough the lag that if the market thinks they're going 25 for some considerable time, and maybe the chairman comes out the next time he talks and says something to the tune of that or something. But it's still a change of pricing in terms of how this market was pricing the future of the Fed. And I think how that's playing out right now, man, because many times I have been saying that the case that the market was playing out for inflation to be tamed was kind of just the bull case. Well, where was the bear case being priced? Because with the S&Ps flirting with 4,200 on the expectation, right? If you didn't miss yesterday's show, folks, all right, I'm just going to go back to where we were, and what we were talking about was you go back to February 2nd. This is a daily basis, daily chart we're looking at. You go back to February 2nd, and that's when the market was thinking, basically, that the Fed's implied rate was going to peak out way below what the Fed was thinking, right? And in the span of February 2nd to where we are right now, the market has adjusted about 3 additional hikes by the end of the year, whether they're hikes, whether they're lack of cuts that were priced in, right? But they're talking about that big of a difference. And meanwhile, you've just seen the S&Ps chop around. I mean, on February 14th, we were at the same price point we were at in February 2nd. Many are asking the question, okay, and I think you're seeing some of it play out this morning, though. You can't always hold long enough for the market to react to what you think may be happening, okay? A lot of people scratching their heads as this market just crushes higher, even as the market adjusts to the fact that the Fed is going to be hiking more than they had priced in previously, which is remarkable to do. Okay, the market reprices itself to say, you know what, we were wrong. The Fed was right. They're going to be higher for longer. We're going to have to adjust our implied rate curve 50 to 75 basis points higher than it was at just 2 weeks ago. And the market weathers that storm. And it weathers that storm as we 500,000 jobs added, a hot CPI number, a very hot PPI number. Fed presidents now talking about maybe they should talk about 50 like they did last meeting. I'd say the conversation's changing a bit. Today might be a dicey day, folks, sprinkling on a very, very hot PPI number. Because if that's on the producer end, and again, we'll get Kevin Hincks' take. He has such a great understanding of some of the fundamental data, folks. He talks about the PPI and how it's far below the line for CPI because those costs don't always translate. But when you get that hot of a CPI number, PPI, when we get that hot of a PPI number that we got today, 0.7% on the month versus 0.4 expected, those costs have to come from somewhere, folks, okay? So are they coming from margins, as in they eat the costs, or are they coming from pushing those costs down the line, which contributes to inflation? And in theory, consumers would come after producers, so that might be even a lag from there. S&P's off more than 48, folks. Stay tuned. We're coming back with our man Kevin Hincks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps off 52 right now, and maybe if my producer could respond to me. I'm not sure you're typing to me. I'm not sure if we have our man on the line. Let me know, please. As the S&Ps, we do. Okay, thank you. Let's jump over, folks. We got our man Kevin Hincks on the line, and let's just jump into it. Kevin Hincks, a very hot PPI number following some pretty hot data this morning. The market finally reacting right now. We'll see if we get some action. Good morning, Kevin.
Good morning, Tommy. Yeah, but if you're trading these markets today, you've been very impressed by how the market has shrugged off stronger economic data. So you're wondering if they're going to do it again today, because you heard me say this on your show, that the PPI inflation data is probably the least important of the 4 looks we get at inflation. So, yeah, this number came out much stronger, much hotter than expected, but the market has shrugged off a lot of that so far this week and since the payroll number came out. So this is still going to be, bears are trading right now with zero confidence that strong inflation data is actually going to sell up the market. Why? Because it hasn't in the last couple of days. So, yeah, these markets are getting real interesting, Tommy.
I was scratching my head a little bit yesterday, Kevin, as this market just crushed higher. I mean, over the course of the day yesterday, you were up almost a full percent. I'm looking at the chart on the Thinkorswim platform, somewhere near 41.20 early in the day. Just accelerates higher, even in the face of all the economic data we got. It's great that you provide us so much great information. You've talked about the PPI versus the CPI. It doesn't always translate down the chain, of course, to consumer prices. Would it make sense, though, Kevin, that when you get that hot of a number, right, those prices either have to get eaten up by the producers or kind of transition to the consumers? So you're either talking about margins or you're talking about inflationary pressure down the line a bit for a pretty substantial beat when you talk about 0.7% on a monthly versus 0.4%. I know the monthlies can be a little volatile, but if you extrapolate that out over 12 months, man, that is some big numbers, 0.7% on a monthly basis. Does this change when it's that big of a beat to you, how important that data may be, the market, as it reacts of quarterly?
Well, inflation igniting at the producer level, some percentage of that is going to work its way into the consumer level. We know that. We just don't know how much of it, right? But these are hot numbers, Tommy. They're not warm. They're not lukewarm. They are hot numbers. And so even though a bullish case can say, headline PPI year over year came down from 6.2 to 6. Core came down from 5.5 to 5.4. Ex-food and energy trade service came down from 4.6 to 4.5. But, Tommy, these month-over-month numbers are frightening in how strong they are. And so a reigniting of inflation and those numbers potentially heading upward, that combined with the comments already this morning from Loretta Mester, who said she sees the Fed funds rate over 5 for some time, and that she favored 50 basis point hike at the last meeting. That starting to creep into the narrative, Tommy, is going to weigh on stocks. Remember, sentiment is that part of trading that we really can't define. We can't put a number on, but it's there and it's powerful.
It's pretty remarkable when you go through all the data, man. 3% retail sales, right? 500,000 jobs added, a hot CPI. We now have a hot PPI number that's pretty hot. You can't overstate it. And then you sprinkle on the fact that what happened in the conversation, Kevin, about maybe March is maybe where they could even pause, maybe one more hike in March, and then we go to May as a potential pause. And now we have 50 basis points. It's going to be interesting to see how the market digests all of that, man. And we're coming right into the lows of Tuesday, which is, of course, an interesting technical point on the CPI data that was digesting. With that in mind, Kevin, still wrapping up some earnings companies coming out with their numbers. What are you guys talking about on Fast Market at 12 today, Kevin?
Still some good names today, Tommy. We'll look at John Deere. Deere and Company, they're coming out with earnings before the open tomorrow morning. We'll look at Applied Materials coming out with earnings today after the bell. And then we're trying to decide with Likefolio, is it going to be DraftKings or is it going to be DoorDash? So it's going to be one of those, John Deere and Applied Materials today, Tommy.
Boy, DraftKings and DoorDash and two great stocks. I was looking at John Deere. That'll be an interesting one tomorrow. Held up so well last year, of course, with the agricultural boom up to 448. You're back to about 410. But, yeah, DraftKings and DoorDash. I mean, these charts, Kevin, looking at them on the Thinkorswim platform, pretty similar charts in terms of how both these equities have just fallen off, both growth companies, of course. Give us a little taste, if you don't mind, on DraftKings. How about that one? Your opinion? We're at $17, man. The low is $9 last year. You've talked about it before, but maybe for some of the listeners, I know it's a battle in terms of the cost that some of these companies are dealing with trying to acquire customers as gambling kind of explodes all over the country.
Yeah, this is a company that's betting on localized gambling and using your phone and not necessarily going to casino, even though they have casinos. But, Tommy, the problem with these names and why their stocks started out like gangbusters and then it trailed off is competition. There's so much competition now for the gambling dollars that these companies are, like you said, it's costing them more money to acquire customers. They're giving out incredible deals to try to lure you to their platforms. So that, at the end of the day, is costing them. Now, is this a war of attrition that they may eventually win? We'll talk about that today. But what people didn't see is the unbelievable competition in this space.
It's pretty interesting to think about, and I've played plenty, when online poker was a booming industry in the U.S., I was playing online poker, so I was exposed to some online gambling in that aspect more so than some. And, of course, they have the competition, and we don't have sports betting in Florida just yet. They're trying to get it done. It's in the courts right now, so we don't have legalized sports betting as many states do right now. But the one thing that is interesting as somebody that's been around that is that I think that competition is probably going to persist because you get recreational gamblers. But, folks, people, just like people in the market sometimes, if there's a competition, Kevin, it's going to be interesting to see in terms of who has less fees, who has maybe the better line, who has the better propositions as that market is kind of ripe for margins. Gambling, if you're the bookie, man, you usually have margins to make. It's just how you spend them. DraftKings, strong company, 17 and change. Kevin, we look forward to it. John Deere, man. I'm sorry, say the second one again. John Deere, was it AMAT as well after the bell tonight?
Applied Materials, yeah.
AMAT, perfect. John Deere, AMAT, and then they'll talk about either DraftKings or a little DoorDash. DoorDash, an interesting one as well. Kevin, I appreciate the time on a busy morning, man, with the S&Ps down 50 points. We look forward to the show at 12 o'clock today, man. We'll talk to you next Tuesday.
Thanks for having me on, Tommy. Have a great weekend.
Always a pleasure. You too, Kevin. Folks, tune in every trading day. You heard it. Yeah, John Deere, that'll be an interesting one. I'll be watching Fast Market at 12 o'clock. I got a Fibonacci number up here. You're talking about 100%, right? Pretty remarkable where this thing goes last year. April, you're at 450. You dive all the way down to a price point of under 300. You get it all back, folks, and look at how close. 446.76 was the high in April. You got to 448. 40. We'll see how it reacts, as might be a little bit of a different story when you talk about commodities, right? The strength of commodities. All of that accelerating this stock. We're back a bit to about 410 for John Deere. Going to be interesting open, folks. We got 4 minutes, less than 4 minutes to go right now on the open. The market might finally be coming to terms, folks. I think we get more speakers than that as well, right? Was that just the first Fed speaker we get? We got a couple. They were in there talking about it in the den earlier today. We'll check it out after we come back for the opening bell, folks. But you're looking at a hot PPI number. And as Kevin said, somewhere that has to translate. And here's the kicker, though, right? It's all a combination. A lot of the talk has been, okay, earnings could face a big problem. Well, if you start seeing PPI numbers at 0.7% on a monthly, some of it's going to go to inflation. The rest of it goes to margins. That's it, which is earnings. One way or the other. S&P's off 50 points. NASDAQ 100 off 196. That's 1.54%. Stay tuned, folks. We're coming back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got S&Ps down about 50 points right now to kick things off. NASDAQ 100, you're off 190. That's 1.54%. You got the Dow off 309 right now. It's going to be interesting where the market decides to go with this data. We're right at the lows that we were at on Tuesday. Let's get those lows to be exact right now. Tuesday afternoon, we hit a low, 4103.75. Okay? Where do we just get to? 4101.50. Just below that number is where we just got. We've popped a bit. You're negative 49 points. Now, where can we go today? The thing to keep in context here is that we were at these lows on Tuesday, okay? Since that number, we've got retail sales and we just got PPI. Retail sales, 3%. Tuesday was CPI. Add on top of it 3%, add on top of the hot PPI number, add on top of it a Fed president saying that maybe we should have went 50 last meeting, and that might give you a glimpse of what the thought is going to be on the Fed. Add on top of that, you have the vice chair, Leo Brainerd. She's gone in 4 or 5 days, and she's been a dovish influence. That is going to be a factor. How big of a factor? I was reading an article yesterday saying, even if they put somebody new in that position, Biden nominates somebody, it's very difficult to have the sway that she may have had being on the board for so long in that position, the respect that she had even from her peers there. I'm sure there will be somebody, hopefully, that's deserved of that position that's put in, but we're still all human. And, it's a relationship business and to some degree when they meet. So how that will influence things, it'd be interesting to see how that plays out. S&P is just sitting where we opened for the first 2 minutes right now, down about 48 points. And I was talking about this briefly, and I just wanted to bring it up if you weren't watching the program yesterday. And this is kind of what I was talking about yesterday, saying the expected federal funds rate, the light blue dots, where we were February 2nd in terms of what the market was pricing in. Well, what the market was pricing in at was that we were basically going to peak out at 475, maybe that's 487, right? Somewhere up there in terms of the range. Well, that's versus right now we're basically 3/4 of a point higher. And that even widens a little bit. Basically stays that way, but you're talking about 3 extra hikes are priced in across the board, and we got the federal funds rate right now going above 3.5 for as long as through 2024 and into 2025, a far cry from 275 being what the market thought just 2 weeks ago. That was yesterday. Things have probably exacerbated a little bit further with the number we just got and the market acceleration we just got. All right, we jump over to crude. Crude sitting at 79.09 right now. The gold contract, 18.42. We jump to notes and bonds. Lower price, higher yield. Fed is going to have to stay higher for longer at a minimum. 10-year off another 8 ticks. 30-year off another 21 ticks right now. We jump over to the VIX. Are we above 20 yet? 1954. Not just yet. Even now with what's going on, it's been such a run up. And that's the thing, man. You got some gains and you don't want to hold on forever. Might be an okay time to take a little off the table, man, at 4,100 and change right now. Because what is in the conversation right now is the guaranteed rate of return, risk-free, which is like 4%, maybe even higher depending where you go out, right? So at 41.10 with the numbers we have, with the volatility the Fed may be facing, and this is why the market may face some wins at these levels, because it's a real number, man. The market hasn't had a competition for real returns, risk-free, like it has right now at these levels with these numbers coming in, okay? Because this is going to add volatility down the line. PPI 0.7%. CPI numbers that we just got, not normal in normal times. They've become normal, and the market's trying to anticipate that we're coming out of them, but not normal, not even close. Now, things really heated up last year. We are going to be dealing with some friendly comps, okay, when we get into the June numbers, when inflation was at 9%, 10%, crude was spiking. But on a core level, it's not going to be as friendly. And these numbers are persistent. Retail sales are persistent. 500,000 jobs are persistent. I'm harping on it. But, man, we're only back to the lows of Tuesday, folks, in the S&Ps. So if you sprinkle on the retail sales number and the PPI and some Fed speak, there's a very real chance we could break this level. Interesting, though, that we are hanging right at this level, probably a critical level, depending on where we break right now. That level, again, 41.03, we're within about a couple points of that level. You got to love it. And we are right at that level right now. Today could be an ugly one, man. The market hasn't reacted to a lot of data. If it decides all in one day that it all does matter and things are changing, you could see the S&P's down 100 points. We're down 50 in a heartbeat, man, just like that. And you put it back to a 5-minute chart, folks, right? We were higher. We were higher, too. You were up at almost 41.70. You're up at a price point of 41.67. So you're off 52 on the session, but you're 60-plus points off of where we were trading at about 3 in the morning. I was up earlier this morning about 5:30. S&Ps were at 41.60, slightly in the green. I said, yeah, I looked at it, scratched my head a little bit, and I say, this made a decision right now that we're going to be okay. We're going to weather this storm. We've priced in what we've priced in. And no, eventually things do matter because the Fed's in a spot, man. And these numbers come in like that. You see a CPI come in like that? Yeah, you better believe the market will go crazy. 0.4 on a monthly versus 0.7. 0.4 expected versus 0.7. Okay. Jumping around. I mean, this is on Bloomberg, right? I mean, this is basically what we're talking about. This is what the market's reacting to. This was at 7 a.m. and then updated, okay? But this was already out there at 7 a.m. Yeah, we can jump around to it. Let's jump around to some of the FANG stocks and see how we're trading as this market. Look at that, 4101. Yeah, very difficult to find a bid on those numbers, folks, because there's two stories, right? One story is that we've tamed inflation, but if we've tamed inflation, earnings are going to be the focus. Well, if you get 0.7% on the PPI, folks, and that's not going to translate to inflation, where's it going to come from? It's going to come from earnings, man. Amazon off 2.5% right now. Apple been so strong, off, yeah, better than the market. Apple's just performing so well, man. Off less than 1% as we have the S&Ps approaching. So much for 4,100, folks. You jump to Meta. It's been quite a year so far for Meta, but Meta, they're going to be rate sensitive, off 2.9% right now. We jump over to Google. It's been a tough couple weeks for Google. They're off 2.1% right now. Tesla shares taking it on the chin, off about 2.5%. Zoom shares off 3.6%. Ahead of Deere earnings tomorrow, they're off about 1%. We jump over to Deere. We take a look real quick. You jump over to the earnings tab. So you got a $405 stock. They're out with their numbers tomorrow morning. You're talking about an $18 move priced in either direction for John Deere on their numbers. AMAT, I believe Kevin said tonight. Yes, AMAT after the bell tonight. You're looking at about a $4.58 move, so not too much volatility. In terms of some of the stocks, you get 10% move. AMAT's got about a $4 move priced in, and John Deere 4 to 5% move as well. Look at this market, man. 4,100. Boy, stairway on the way up and the elevator on the way down, folks. And this may be a tough day with the NASDAQ off 1.75% right now. Even the Dow off more than 1% right now. We jump over to the currencies. There's a spike for you. Dollar pushing just above the highs we had yesterday now. 104.10 right now on the dollar. We put this thing back on a daily. Just like that, the dollar is back to where we were December 5th. All right, folks, stay tuned. S&P's off 54. We'll take a look at some of the other equities moving this morning. I'll be right back in 3 minutes. Don't go away.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the fund is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's off 51 right now. NASDAQ off 178, 12,550. That's 1.4% in the NASDAQ, 1.2% in the Dow, and at 1% right now. Excuse me. We'll do it again. 1.4% for the NASDAQ 100. 1.25% for the S&Ps, and 1% for the Dow right now. The Russell off 1.3%. Nothing getting spared in this market right now. Although Apple, as I said, behaving better. Look at that, man. Apple only down 0.7, a little bit of a safe haven in terms of Apple. All right, jumping around, let's jump to Paramount before we get there. Paramount down by 6% right now on their numbers. We jump over. Price increases, hits 56 million subscribers. Some of these numbers, man, just staggering, right? It added 9.9 million Paramount Plus subscribers during the fourth quarter. I think Buffett's got a huge position in Paramount, right? Tough advertising market. Revenue down 7%. So Paramount Plus Premium is going to include Showtime. It's going to go to $11.99 from $9.99, and the lower priced one without Showtime is going to increase by $1 to $5.99. They have some good movies. They have some good shows. So tough to compete right now, though. I was talking to my dad last weekend or somewhere like that, and I was talking about HBO, right? Warner Brothers Discovery, that would be. And I really like, they're off 2.3%, probably a little bit with what's going on with Paramount, with the market as well, though. S&P's off 50 right now. But I said they're going to have, I believe it's Walmart, not Walmart, HBO Discovery Plus, something like that. And in that, you're going to gain access to Lifetime, TLC, some of the shows that people in my household enjoy on those networks. And when we were originally cutting the cord maybe a couple of years ago, we couldn't quite get, with 5 people in the house, 2 adults, 3 children, the exact mix. You know what? For us, it didn't make sense actually to cut the cord just yet. We could have if we necessary, okay? But people like their shows. That one, though, I thought combining those could be a big one. But nonetheless, this thing been taking it on the chin. You look at that chart. Now remember, this $78 was Mr. Bill Huang and the run-up of his position and the escalating losses as everybody sold everything. Okay, so that is a very irrational high, to the tune of fraud, practically, or at least over-collateralized positions that he had to unwind that nobody even was aware of. Nonetheless, off of $8 right now from the lows. Warner Brothers off about 2%. All right, what else we got pulled up here? Let's take a look at some of the other stocks that are moving right now. Yeah, Shake Shack out with their numbers. Narrower loss than expected. Same-store sales rising 5%. We jump over to their symbols. I believe it's Shack, right? Yeah, Shake Shack. Yeah, off about 6%. Look at that volatility, man. Not sure what they said in the conference call. Yeah, be careful of this market, folks. If I had to buy it or sell it, I know that, there's such a thing as standard deviations and expected moves. On days like today, be careful right now because we're just right back at the Tuesday low. And it's a pretty substantial amount of data right now with a rate shift going on. And then you get some Fed speak on top of it. I'm not sure I'm holding for the weekend. Holding, that 41.10 right now is a price that I want to be long for a risk-reward profile overnight into a weekend. Day trade at these levels, I got you, man. We're right at these lows. That's a great area. You get your back against the wall. At least you know where you set your stop, right? Nothing wrong with that, trading this both ways. But boy, when you talk about a quick reaction right now to a very hot PPI number in this market, struggling to find a bid now 16 minutes into the trading day. All right, we talked about Paramount. We talked about Shake Shack. Let's see. So Virgin Galactic, they're trading higher. Day after its Eve mothership had its first test flight, I would stay away from Virgin Galactic, folks. A bunch of people, unfortunately, got sucked into this one right when Branson went into space. Looks like it might be happening again from 520 up to 620 basically today. You're up 1.8%. But don't forget about, folks. Don't forget about what happened, man. This thing was a SPAC. They sold a bunch of shares. I think, who's the guy who was leading all the SPACs, right? He got in there. He sold his whole position. They sold shares into the public to raise money, and then it trades from $62 down to $3. This guy, you got to admire the businessman and a grand self-promoter to any degree in terms of Richard Branson. I remember all the networks covering it and being like, man, what a commercial, right? How do they do this? How do they do this? And meanwhile, it's not all for show. They profited to the tunes of hundreds of millions of dollars by having everyone cover their spaceship. The stock accelerates higher, and then they sell. It'd be one thing if they weren't selling, right? But they're selling. They're selling shares to the public at inflated prices. So be careful on this equity, man. Space travel is a long way away, to put it lightly. TripAdvisor, they got a downgrade. Yeah, these trip stocks, vacation stocks. Is it Trip? Yeah. Down 6.3%. Watch out. Okay, Roku shares. Let's see. How's Roku trading this morning? There you go. That's a run up for you the last couple days. Let's take that Fibonacci off there. You're talking about from $54 up to 70. You're up 11%. Now, here's the kicker, folks, and you can go through this on the Thinkorswim platform. They allow you to play back on demand in terms of you can go back any point in time and basically paper trade in the past. I don't even have to look at those numbers to know, because the volatility that's been associated with Roku, they're usually talking about a 10% move, maybe priced in either direction. So if you haven't watched Fast Market, folks, you want to understand options, you see a 10% move. You said, I could have been in there, right? I could have been in there buying. I could have profited. Depending on how you set up that trade, sometimes even when you get moves this mammoth from the close yesterday, now it had a run up higher into those numbers as well. Okay, but 10% move on Roku, pretty standard stuff, basically, in terms of what is priced in for that equity when they come out with their quarterly numbers. But strong numbers for Roku. Narrower than expected loss. Pretty narrow, though, in terms of just pretty much at the number. $1.70 versus $1.73. Revenue topped estimates, though. That's quite a beat. $867 million versus $802. An extra $65 million. What is that, man? You're talking about 16%? Something like that, a revenue beat of 16%. No, excuse me, $60 million. No, 7%, 8%, something like that. Still, decent beat on a revenue basis, even when it's only $60 million percentage-wise. Cisco trading higher. They raised the outlook. They beat with 88 versus 86. We'll jump over to theirs. Oh, yeah, let's go. We'll jump to Cisco first. There's your action on Cisco, up 6.5. Shopify, off 15.6%. Man, what a drop. So Shopify, it's guidance they're talking about. Yeah, missed on guidance, lighter than expected. It's not what have you done for me in the last 90 days. It's what have you doing for me in the future. They're getting hurt by the market as well right now. Okay, you could make the case that they would be trading at about 48 before this market just sold off. So they've lost about $3 basically with the market, as they are a growth stock to say the least. But man, some tough numbers for Shopify, and this was supposed to be, I was reading a couple articles, the quarter that maybe they turn things around. That's why you saw maybe the acceleration that you had this year from a price point of 34 up to 54 coming into those numbers. But no, they're not there just yet. Shopify might be a tough day for them as the market down 50 points. Struggling to find a bid right now. S&P's at 4109. NASDAQ off 1.4%, still holding at those lows, basically. Bitcoin, though, you can't hold Bitcoin down. How about it, man? Stay away from Bitcoin, folks. Can you make money in Bitcoin? Yes. Can you make money in other vehicles without the risk associated in Bitcoin? I think so. Doesn't mean you can't put a little risk capital, but you put it in there, man. You're buying any Bitcoin, realize it can be back to 15,000 in a heartbeat, in my opinion. And I'm not even sure why. But to be well over where we were before the FTX collapse, 15% above those prices, If it doesn't make sense, you don't got to buy it, folks. S&P's off 50. We'll be right back. One more segment. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now, negative by 50 points. All the markets just kind of hanging right where we started the program. Right where we started the program off. I had to check myself, but pretty much 41.10. You make it to 4100 right near the open. We're up a bit. Still, S&Ps off 50 points right now. Jumping around to the rates, the 10-year. We'll pull up the chart real quick in terms of price action. Continuing, man. Okay. Now, the market's not even holding toe right now in terms of the sell-off that we've had. At 9 o'clock, we were at 111.30. We've lost 10 ticks from where we were at the start of the program. That's higher rates. Even when we started the program, market hasn't really kept up yet. You could make the case the market priced that in. I would make the case, man, that we have more way to go. Off 50 points right now. I chuckle as in the S&Ps are off 1.2% right now. We're at a critical level at the lows of Tuesday. But boy, folks, you start looking at charts, right? This is a chart of the 10-year yield, okay? As you can see, we're at 3.86% right now. It's been quite a run in terms of where we were February 1st, okay? You were at 3.4. So we're up almost 0.5% on the 10-year in a period of 16 days. We are beginning to pull back a bit, but the S&Ps really haven't pulled back that much, and we're back to basically where we started the year on the 10-year yield, okay? Well, we all know that we're what? 300 points higher on the S&P from where we started the year? Let me take a look at the daily. Where are we? Yeah, 38.50, 41.50, somewhere in that ballpark. Yeah, I had to get. Yeah, there it is. This is the daily, and we come into it at about 38.50. So keep your eye on rates. Keep your eye on where they are now versus where they've been. You're back to the 10-year right now, where the market was trading at 38.50. And I would make the case that, if anything, the data is worse than you would have thought maybe then in terms of how that market was pricing things in. We'll see where the day goes. We get more Fed speak. We'll see where that goes. NASDAQ right now. NASDAQ 100 off 1.2%. S&Ps. Yeah, look at the NASDAQ catch a little bit of a bid. S&Ps slightly. We're talking 9 points right now off that level. We got the Dow off 371. We jump to the dollar index as we wrap up the program. Dollar hitting a recent high of 104.18. Thanks so much for starting the trading day with me, folks. Our man Basil Chapman, he's up live next. We get Steve Rhodes live at 11 o'clock. Fast Market at 12. You heard them. They're talking John Deere. They're talking AMAT, maybe DoorDash, maybe DraftKings. Larry Pesavento at 1, Steve Rhodes, Dave White at 2, and my dad live 3 to 4. Have a great Thursday.